right, well, let's start out with what's going on with initial jobless claims for the week ending January 23rd. 186,000. 186,000. That is a new cycle low. That's going to take us back to April of this year, last year, 22. And if we look at continuing claims, 1.675 million, 1.675 million. GDP, 2.9%, 2.9%. Obviously, that's a good quarter, maybe the last positive quarter that we get with respect to growth in the economy. And as we start to look at some of the other numbers populating here, I see that durable goods is coming in. Durable goods coming in at up 5.6%, up 5.6%. That is a very strong number. Now I'm getting the rest of the data with regard to GDP on pricing. The price index is 2.1%, 2.1%, and that is a very good number. If you're looking for inflation to come down, that comes down from the 2.3 level. And the last time we were at a 2.1 level, you have to go back to the second quarter of 2020 when it was minus 1.3. And if we look at what the quarter-over-quarter personal consumption expenditure core is, it is under 4%. Many predicted that. It's 3.9%, 3.9%. The last time we had a number in that camp was the first quarter of 21 when it was 3.2. And if we look at the final numbers on the trade balance, minus $90.3 billion. That's bigger than anticipated. Wholesale inventories up 1/10, much smaller. That's a decent preliminary. Retail inventories up 0.5, double expectations. And we're getting some revisions. Last month's 190,000 on initial jobless claims. Subtle change to 192. And if we look at the ex-transportation, remember, durables up 5.6% is extremely strong. As a matter of fact, that is the best number going all the way back to the summer of 2020. And if we look at all the internals there, you can tell it was transportation figured in prominently, because once you take transportation out, 5.6 nosedives to minus 1/10 of 1%. If we look at capital orders, non-defense ex-aircraft, a proxy for capital spending, it's down 2/10. That has been a rather bumpy ride, but we've had some solid months. Down 2/10 is not one of them. You look at shipments, also a very depressed number, down 0.4 of 1%. Both of those numbers were predicted. Both of those numbers were built in. Both of those numbers are preliminaries, and they may change. So just a quick recap. Both the pricing issues on the GDP came in less than expected. If you look at interest rates, they are moving up. They're moving up. Now, not huge. We're up about 2 or 3 basis points in a 10. The equity markets have dropped a bit. Pre-opening Dow futures. I think what they're concentrating on most is probably initial claims and continuing claims being on the downside. I find it hard to believe the market's going to be too upset with regard to the GDP numbers. However, the final comment I will make is when you look at the price index, it is definitely well below last month's 4.4 at 3.5, but many were expecting an even lower number. Becky and the gang, back to you.